Imagine waking up, checking your phone, and seeing a notification that sends your heart into your throat. The Iraqi dinar, the currency you've followed for years, the subject of endless forums and whispered hopes, is suddenly trading not at its usual fraction of a cent, but at $3.30. Not in some theoretical future, but right now, live on a financial screen. Your mind races. Is this it? Is this the fabled revaluation, the RV, happening not in some vague tomorrow but on an ordinary Tuesday morning? This precise shockwave is electrifying the global dinar community right now, as claims of a live IQD rate hitting $3.30 erupt across social media and niche financial circles, igniting a 2025 buzz so intense it feels like a dam about to break. But before you let that surge of adrenaline dictate your next move, you need to press pause. You need to step back from the cliff edge of speculation and understand the profound, complex, and often deliberately murky reality of what you're witnessing. This isn't just about a number on a screen. It's a psychological, economic, and geopolitical event wrapped in a decades-long saga of hope, patience, and relentless information warfare. Today we are going on a deep, unfiltered dive, bypassing the usual hype and generic commentary, to dissect the very anatomy of this IQD shockwave. We will trace the origins of this specific $3.30 claim, unravel the technical mechanisms, or lack thereof, behind such a live appearance, and confront the brutal, unvarnished truth about the Iraqi dinar's journey from a currency printed in the billions to a symbol of life-changing wealth for international holders. This story begins not in Baghdad's green zone, but in the human mind's vulnerability to patterns and desire for confirmation. The $3.30 figure isn't random. It's a ghost from past prophecies, a number that has floated in RV narratives for over a decade, often tied to outdated IMF basket theories or speculative projections of Iraq's oil wealth divided by its currency in circulation. Its resurgence is a classic case of archetype recycling within a community hungry for a signal. When you've waited for so long, any data point that matches the old prophecy feels like a key clicking in a lock. So, the first layer to peel back is the source. Where exactly did this live rate appear? Was it a legitimate, regulated forex trading platform like Bloomberg, Reuters, or even a reputable bank's internal system? Or was it a screenshot from a lesser-known, region-specific financial data website, a simulated interbank display, or, as has happened countless times before, a digitally altered image or a misinterpretation of the Iraqi dinar's official program rate, which is pegged to the US dollar at 1,310 dinars for budgetary purposes? The terrifying and thrilling truth is that in the digital age, the veneer of authenticity is cheap to produce. A convincing graphic, a cryptic post from an insider account with a few thousand followers, a shaky video of a computer monitor in a foreign bank, these are the kindling for this fire. The phrase "goes live" is the critical hook, implying real-time transactional reality. It suggests that at this very moment someone, somewhere, is exchanging dinars for dollars at that earth-shattering rate. But the global foreign exchange market is an interconnected beast. Such a monumental revaluation would trigger seismic waves across every financial institution on the planet within seconds. It wouldn't be a quiet rumor on Telegram, it would be a breaking news alert on every major network, and the International Monetary Fund would likely issue a statement before the hour was out. The absence of that global cacophony is the first and loudest clue. However, dismissing it outright as mere fake news is to miss the deeper, more fascinating narrative. This buzz is a symptom, not the disease itself. It reflects a pent-up, colossal anticipation for Iraq's long-promised and perpetually delayed integration into the global financial mainstream. The Central Bank of Iraq, CBI, has been on a multi-year, arduous journey to modernize its monetary policy, fight rampant dollar smuggling, and signal to the World Bank that it is ready to have its currency float freely, or at least be revalued to a number reflecting its sovereign wealth. Every tiny step, a new digital payment system here, a statement about reducing cash dependence there, is magnified through the lens of the RV community into a harbinger of the event. So when a $3.30 live rate pops up, it's not created in a vacuum. It latches onto these real, albeit incremental, reforms. The buzz is a distorted echo of genuine progress. Understanding this is your superpower. It allows you to separate the explosive, emotional signal from the slow, grinding noise of economic reality. Your journey to being an informed observer, not a reactive speculator, starts with this grounding. The Iraqi dinar story is a marathon of historical complexity, not a sprint triggered by a screenshot. We are about to journey into that history, into the vaults of the CBI, and into the very paper your dinar notes are printed on, to build a foundation of knowledge so solid that no shocking hook can ever knock you off balance again. Stay with me because what comes next will redefine how you see every update from this day forward. To truly grasp why a $3.30 rumor can cause a shockwave, you must first understand the ground it shakes. The story of the Iraqi dinar is a story of three distinct currencies living in one note: the pre-1990 currency of a wealthy, industrialized nation, the post-invasion currency of chaos and reconstruction, and the potential future currency of a resurgent economic power. This fractured identity is the root of all the speculation. After the 2003 invasion, the Iraqi dinar was effectively reborn. The Swiss print notes were introduced to replace the Saddam-era currency, but they were introduced into an economy in ruins, with a value set by the Coalition Provisional Authority initially at roughly 1,500 dinars to the dollar. This was a pragmatic, administrative rate for a nation starting from zero. It was never intended to be a permanent reflection of Iraq's inherent value, which lies overwhelmingly in one thing: oil. Herein lies the seductive core argument of the RV thesis. Iraq possesses some of the world's largest proven oil reserves, a resource that generates tens of billions of dollars in annual revenue for the state. If you take that resource wealth and theoretically back the currency with it, the math seems to scream that the dinar is wildly undervalued at 1,310 to the dollar. The $3.30 figure often emerges from back-of-the-napkin calculations dividing oil reserves by currency in circulation, a simplistic model that ignores the labyrinthine realities of modern monetary policy. A nation's exchange rate is not a direct dividend of its natural resources. It is a complex function of trust, inflation control, trade balances, foreign reserves, political stability, and global market confidence. Iraq, for the last 2 decades, has been building the scaffolding for that trust, often while putting out fires. The Central Bank of Iraq's CBI primary mission has been stability, not revaluation. Its tool has been a tight dollar auction system to manage liquidity and a hard peg to the US dollar to prevent runaway inflation. This peg is the cage that keeps the dinar's market value artificially low but stable. For an RV to happen, this cage must be opened deliberately and carefully. The CBI has been signaling a move away from this rigid peg for years, towards a managed float, or a new, stronger fixed rate. This is the legitimate official source of all RV anticipation. Every statement from Governor Ali Al-Alak about strengthening the dinar, or reducing the gap between the official and parallel market rates, is a piece of this official puzzle. The parallel market, the black or gray market rate where dinars are traded on the streets of Baghdad, is the true pressure gauge. For years, this rate has been significantly weaker than the official rate, sometimes exceeding 1,600 IQD/USD, indicating a massive lack of confidence and a thriving dollar smuggling economy. The CBI's recent genuine crackdowns on this illicit market, using new digital monitoring and restricting cash dollar withdrawals, are serious efforts to close this gap. When they succeed in raising the parallel market rate to near the official rate, they create the stable platform from which a formal revaluation could be launched. This is the real, grinding, unsexy work that forms the basis of any future change. The shockwave rumors, therefore, are often a grotesque parody of this technical process. They imagine the RV as a magical, overnight event, a flip of a switch in the global banking system, often called the GCR, or global currency reset by gurus. In this fantasy, all currencies simultaneously readjust to their true value based on assets, and the dinar shines at $3 plus. The reality is far more bureaucratic. Any change would be announced by the CBI and the IMF, likely with a transition period. It would start with a change to the official program rate, say from 1,310 to a number like 1,000 or even 100 to the dollar as a first step, not a jump to dollars. This would be a massive, celebrated achievement, but it would still leave the dinar worth cents, not dollars. A journey to a dollar valuation would be a multi-step process over years, if it ever happens, as it would require Iraq to transform into an economic powerhouse beyond hydrocarbons. So, the $3.30 live screenshot is a quantum leap over all these necessary intermediate steps. It's science fiction compared to the slow-moving documentary of economic reform. But it persists because it offers a clean, simple solution to a complex, frustrating wait. It bypasses the politics of forming a government, the technical hurdles of financial infrastructure, and the global risk of speculators crashing the new rate. Your education today is about anchoring yourself in the documentary, not the fiction. The real buzz for 2025 should not be about leaked screenshots, but about watching key indicators. The continued narrowing of the parallel market gap, the success of the CBI's digital dinar initiatives, the passage of critical financial legislation like the anti-money laundering laws, and the statements from the IMF after Article 4 consultations with Iraq. These are the dry, technical reports that hold the real seeds of change. When you understand this, you become immune to the shockwaves. You see them for what they are: stress releases in a community under the immense pressure of its own expectations, a communal Rorschach test where a blurred financial chart is seen as a doorway to paradise. The power shifts to you when you stop looking for the doorway and start studying the blueprint of the building itself. A blueprint written in monetary policy reports, foreign reserve statistics, and the painful, incremental progress of a nation rebuilding itself from the ground up. Now we arrive at the human engine that powers this entire phenomenon. You. The investor, the watcher, the hopeful individual on the other side of the world. The psychological landscape of the dinar community is as critical to understanding the shockwave as the economic landscape of Iraq. This is a unique space, forged in online forums, YouTube channels, and private groups, where a shared narrative of imminent wealth has created a powerful, self-sustaining ecosystem. Within this ecosystem, information is currency, and intel is king. A hierarchy exists, from self-proclaimed gurus with insider sources to everyday members sharing the latest screenshot. The dynamic is fueled by two powerful human drives: the fear of missing out, FOMO, and the desire for community validation. When a $3.30 rumor breaks, it triggers a cascading effect. First comes the disbelief, then the frantic sharing. Have you seen this? Then the analysis from the gurus, which usually follows a pattern. Initial caution, then a teasing of possibility, then an alignment with the prophecy they've been teaching for years. This isn't necessarily malicious. It's often a product of confirmation bias, where every piece of data is interpreted to fit the established belief. The community has a shared lexicon. The banks are on standby, asset-backed currency, the gold standard, the new international rate. The $3.30 claim gets immediately processed through this lexicon, giving it a fabricated sense of legitimacy. It feels like part of the story because it's forced into the existing plot. This ecosystem also has a remarkable resilience to disappointment. Dates are predicted and pass, sure things evaporate, and yet the community reforms, its faith not broken but redirected. The narrative evolves. The RV didn't happen because of a last-minute political snag, or because the global reset needed alignment, or because it was pushed back to a more auspicious time. This cognitive dissonance, holding a belief despite contradictory evidence, is strengthened by the social bonds formed in the wait. For many, the forums are not just about the dinar, they're about connection, a shared purpose, a daily ritual of checking for the news. This makes the community incredibly robust but also vulnerable to exploitation. And are the bad actors. The sheer volume of money spent by hopeful individuals on dinar purchases over the years has created a fertile ground for secondary markets. There are the obvious dealers selling the physical notes, but there are also the premium intel vendors, selling subscriptions to insider reports, or the consultants offering to guide you through the upcoming banking process for a fee. The shockwave rumor is jet fuel for this side of the industry. It creates a sense of urgent need to buy more dinars before the rate locks, to get the exclusive briefing on what to tell your bank. It's a pressure sales tactic on a global scale. Furthermore, the rumor mill can be used for pump and dump schemes, where coordinated hype is used to artificially inflate the perceived demand or the black market price of dinar booklets before a coordinated sell-off by those who started the rumor. Understanding this human and commercial layer is your armor. It allows you to view every piece of news with a new set of questions. Who benefits from me seeing this right now? Is the source selling something? Does this information make me feel urgency or fear, or does it educate me with verifiable facts? The legitimate path of the dinar is not secretive. It's public but tedious. It's published in the CBI's weekly bulletins, in IMF staff reports, in Reuters and Bloomberg articles about Iraq's debt issuances or oil production quotas. The shockwave exists in the shadowy, exciting world of secrecy. The reality exists in the dry, public domain of financial data. Your goal should be to migrate your attention from the former to the latter. This doesn't mean abandoning hope in Iraq's potential. It means anchoring that hope in reality. The genuine, positive developments for Iraq are happening. The country is slowly connecting its grid to the GCC, signing development deals for its gas fields, and aiming to diversify its economy beyond crude oil exports. A stronger, more stable Iraq is the only true and sustainable path to a stronger dinar. A revaluation to a fraction of a cent more is a monumental achievement on that path. The fantasy of a 40,000% overnight jump to dollar parity is not just unlikely, it would be an economic disaster for Iraq, making its non-oil exports impossibly expensive and wrecking its budget, which is calculated in trillions of dinars. When you internalize this, the $3.30 shockwave transforms from a siren call to a case study in mass psychology and market manipulation. You become a detached analyst, not a potential victim. You start to appreciate the real progress Iraq is making on its own terms, which is a far more stable and honorable thing to root for than a get-rich-quick myth that depends on the suspension of all economic laws. So, where does this leave us as we navigate the roaring buzz of 2025? We are left not with a simple yes or no, but with a powerful, nuanced framework for discernment. The ultimate truth about the Iraqi dinar is that its fate is inextricably linked to the fate of Iraq itself. There is no separate, magical financial event called an RV that will happen in a vacuum. The value of the dinar will appreciate when and only when the Iraqi economy and its financial governance demonstrate sustained, irreversible strength that convinces the global market it deserves a higher valuation. The path is clear and public. Watch the gap between the official and parallel market rates vanish. That is goal 1 for the CBI. Watch for the official announcement of a change to the program rate, a move from 1,310 to a new, stronger number, celebrated on the CBI's website and by the Iraqi government. That will be the true historic RV moment, even if the new rate is still in the realm of fractions of a cent. Watch for Iraq's sovereign credit rating to slowly improve, for its bonds to be in higher demand, for foreign direct investment outside the oil sector to tick up. These are the metrics of real value. The shockwave of a $3.30 live rate is a distraction from this measurable journey. It is a meme, a piece of financial folklore that gets repackaged with new dates and new screenshots. Its resilience is a testament not to its truth, but to the profound human capacity for hope and narrative. Your takeaway from this deep dive should be a sense of calm empowerment. You now possess the context to deconstruct any future rumor. When the next shocking screenshot appears, you will ask, has the CBI issued a statement? Have the global forex platforms like XE or OANDA updated their feeds? Has the IMF's SDR basket valuation changed? If the answer is no, you have your answer. You will understand that the Iraqi dinar is not a speculative asset in the traditional sense. It is a long-term bet on a nation's recovery. It carries profound risk, not just of financial loss, but of loss due to confiscation, fraud, or simple illiquidity. Try selling large volumes of physical dinar notes at any rate above purchase price in a hurry. The legitimate financial world does not treat it as a tradable currency pair for retail speculation for a reason. Therefore, the most critical call to action is not to rush and check a bank website, but to undergo a brutal, honest audit of your own position and mindset. Why are you in this? Is it based on a deep, researched belief in Iraq's 30-year economic future, or is it based on a story of overnight transformation? Have you diversified any speculative hopes, or have you put emotional and financial eggs in this one basket? Use the energy from this 2025 buzz not to scan more forums, but to educate yourself on the basics of forex markets, on Iraq's actual economic indicators from the World Bank, and on the history of post-conflict monetary reforms. Become an expert on the reality, not the rumor. That expertise is your true wealth. If your goal is to position yourself for global currency shifts, study the IMF's SDR, the rise of digital currencies, or the potential of other frontier markets with more transparent pathways. Broaden your view. The fixation on a single specific rate like $3.30 is a form of tunnel vision that can blind you to other real opportunities and to the tangible risks in front of you. For Iraq and its people, a stable, gradually appreciating dinar is the dream, one that supports their salaries, their savings, and their national pride. That is the dream we should all be hoping for, as it is the only one grounded in reality. The sensational, life-changing rate for foreign holders is a byproduct only of that stability achieved over decades, not a precursor to it. So, let this be the moment you change your relationship with this entire subject. Let go of the addiction to the intel drip feed. Unplug from the cycles of hype and letdown. Bookmark the Central Bank of Iraq's website instead. Read an IMF report on Iraq. Follow reputable financial news for Middle Eastern economic developments. Become a sober observer of a nation's climb, not a frantic participant in a never-ending rumor mill. That shift in perspective is the most valuable revaluation you can ever achieve. It will free you from the anxiety of the shockwaves and ground you in the empowering knowledge of how the world actually works. The future of the dinar is being written in Baghdad, Erbil, and Basra, not in a Telegram channel. Direct your attention there and you will finally see the real picture, clear, unshakable, and real. This is where your power truly lies. Don't just be a passenger on this roller coaster of rumors. Become the analyst. I want you to do one thing today that changes everything. Open a new tab right now. Go to the Central Bank of Iraq's official website. Find their latest monthly statistical bulletin. It's usually in PDF format, often in both Arabic and English. Scroll to the page that shows the daily exchange auction results and the parallel market rate. Just look at it. Don't try to interpret it with hope or fear. Just observe the raw numbers. That page, updated with dry, bureaucratic regularity, is the true heartbeat of the Iraqi dinar. Bookmark it. Check it once a month. Let that be your primary source. Let the shocking hooks and sensational headlines fade into background noise. When you've done that, come back to this video and tell me in the comments what you found and how it felt to look at the source data for yourself. That first step, choosing the official record over the whispered rumor, is how you take back control. Do it now.